Visa is an iconic global brand operating the largest digital payment network in the world. The company has a dominant market position, growing earnings, high free cash flow, large share repurchases, and a fast-growing dividend payment. However, Visa's stock is down 4% today. That is one of the largest one-day dips you'll see in a blue-chip company like Visa. So why did it happen? Well, there were some details in the earnings report that led some analysts to be slightly concerned about slowing growth. On top of this, the latest earnings news led to massive crashes across the broader stock market. For example, Tesla is down over 12%, Broadcom down 7.5%, Nvidia down 6.8%, Meta down 5.61%, Google down 5%. This is a lot of price action, and the S&P 500 is down 2.3% on the day. But is the stock market crash actually a buying opportunity? Today, I'm going to analyze the latest quarter and give a full picture look at Visa stock. If you stick around to the end of the video, I'll explain whether I'm buying more Visa stock right now, and I'll share my entire updated position and thesis around the company. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. Every week I post stock analysis videos, and every month I give an updated look at my long-term dividend growth stock portfolio. Visa, ticker symbol V, fell 4% on the day, bringing the current price to $254.17. And that brings the current valuation to $508.59 billion. Based on the trailing 12 months, that's a lagging PE ratio of 27.18, and the forward-looking PE ratio based on analyst estimates for the full year fiscal 2024 is 25.56. Forward-looking annual dividend is $2.08, which is a 0.82% dividend yield. While that starting yield is low, Visa is known for its high dividend growth over time. Your compound annual growth rate of the dividend is 17.92%, while maintaining an extremely low payout ratio of 20%. So this is a very small percentage of their cash flow. They use a large chunk of the rest of that money to buy back shares at an incredibly high rate. Financially speaking, Visa is a machine. Their financial situation is something most companies could only dream of. They have 80% gross margins, 53% net margins. Their cash from operations and free cash flow continue to grow over time with limited capital expenditures, and this allows them to increase shareholder rewards of share repurchases and dividends year after year. So why is Visa stock down today? Well, I'm going to dive into that Q3 earnings report to see if we can figure out any fundamental changes or reasons why. And at the end of the video, I'm going to provide future earnings estimates and a price target for Visa stock. That'll be from the consensus of analysts on Wall Street, but also I'll give my own thoughts around that number. And finally, I'll explain whether I'm buying Visa stock right now. And by the way, if you want to use the tool I'm showing throughout the video, then sign up at dividenddata.com. This is a stock research tool that I designed specifically to help you find better investments. Now let's dive into Q3. All right, so let's just dive into like the most important parts of this earnings report. Net revenue for the quarter, $8.9 billion. That's a 10% increase year over year. GAAP net income up 17% year over year. EPS up 20% year over year to $2.40. Non-GAAP net income up 9% year over year to $4.9 billion. And non-GAAP EPS up 12% year over year to $2.42. So this is pretty much a continuation of Visa's low double-digit growth rate, specifically around that 10% number. And that is what I use for most of my forward forecasting of Visa stock. So in their key business drivers, payment volume is up 7% year over year. Cross-border volume is up 14% year over year. Processed transactions is up 10% year over year, and processed transactions is up 10% year over year. And just during this quarter, Visa had $5.8 billion of share repurchases and dividends. Now I'm going to dive into greater detail about some of the negatives I found in the report, but on CNBC and most of these investing websites, they don't really know why the stock is down for the most part. In fact, they say that the earnings report was fine, and on the surface level, it pretty much was fine.
How do you read this quarter?
Fine, just fine. In line for a company that trades at this multiple is, a tiny bit disappointing. So, but 26, 27 times earnings, That's actually not a crazy price for a company like this, but I don't own it here.
Yeah, guys.
So it's a fine quarter. I mean, I think revenue's up 10% or so year over year. The problem, of course, is since March, the stock has been trading very poorly on a broader market until recently, at least, that's done extraordinarily well. You had a downgrade a couple weeks ago. There's clearly something going on here that I think the analyst community is starting to figure out. And I think the stock market is starting to figure out as well. I can't put my finger on it necessarily. Obviously, it's not a credit thing. But maybe the transaction growth, which was so robust for so long, seemingly is slowing down. And at 28 times may not be justified in this environment.
Now, I do agree with them. The earnings report was fine. The growth rates were fine. Everything's moving in the correct direction as a long-term Visa investor. And I would mainly just disagree with his last point, acting as though the market is this intelligent thing from which you should take your insights from. Just because a stock is going up or down, it does not mean they have some advanced knowledge on the topic. However, to give him credit, he did bring up one of the potential concerns that could be looked at from this earnings report, and I'll explain that now. So the one potential concern I've seen, and I've seen it voiced in other areas, is that the growth rate was slowing towards the end of Q3. All of these different charts, you can basically see that since May, the growth rates of all these different segments has been declining. Now we need to still think in our mind and keep in mind 4 to 5% growth of payment volume is still positive and good. 9% growth of processed transactions is still great. 15% cross-border volume growth is still good, etc., etc. So what we're talking about here is a slowing in growth, not a decline or anything like that. And here's another way you can see that compared to Q2 of 2024. You can see that the growth rates for Q2 were higher in every single category: credit, debit, and total. Now it seems like this has been exaggerated by currency changes, as in a constant currency example, credit only went from 8 to 7%, debit went from 9 to 8%, and the total went from 8 to 7. And if you look at this, it is most extreme in international markets. And a large portion of this does seem to be related to currency, because under constant, these are only 1% drops. And in my opinion, a 1% drop in growth rate is basically nothing, because that could flip any direction in a very short time frame. And you can see here that the total amount of cards issued for debit, credit, and basically on the Visa payment network continues to grow. 8% more cards in circulation. And I would like to point out this small detail. So it seems like the international transactions are facing the largest currency issue. And one of the factors why I choose to invest in Visa stock is because they have a larger portion of their business in the United States compared to something like MasterCard. Visa has about 44% of their revenue coming from the United States, and they're a larger business overall, while MasterCard, being smaller, only has 33% coming from the United States. So here, looking at MasterCard, it's only down 2% on the day. And I actually imagine that their results will be pretty equivalent to Visa's because they play in a lot of the same markets. However, a larger portion of their business is in this international part, and in the short term is facing currency issues. However, I would like to point out that over the long term, I don't think this is a significant risk in either of the businesses. I think both will do great. So at the end of Q3, Visa had $19.7 billion in cash and cash equivalents. Quarter, they generated $5.1 billion in cash from operations, and they actually spent $400 million on capital expenditures, which is more than usual. They're usually in that $200 to $300 million per quarter range, which brought free cash flow for the quarter to $4.7 billion, or $12.3 billion so far in 2024. In Q3, they spent $4.7 billion on share repurchases and $1 billion on dividends. These are sustainable and will continue to grow as long as the business is growing. Visa shared a financial outlook for the fiscal fourth quarter and fiscal full year 2024. For revenue growth, they're expecting low double digit for Q4. For full year 2024, they're expecting low double digit growth. Operating expenses to grow in the high single digits, and for the full year, high single digits to low double digits. And for earnings per share for Q4, they're expecting the high end of low double digit growth. And for the full year 2024, they're expecting low teens double digit growth. So this is all great and in line with my long-term thesis around the company. And if we look at what analysts are projecting around the stock, for fiscal 2024, they're expecting it to be 11% growth overall, which would be $9.95 EPS. That's a 25 P ratio at current prices, and we're only one quarter away from that, so next quarter. And then for fiscal 2025, they're projecting another 11.78%, bringing the P ratio at current prices to 22.8. In 2026, they're projecting 12.63% growth. 2027, 13.69% growth, bringing the P ratio of 2027 to 17.8. The current analyst price target on the stock is $284.53, 12% undervalued at current prices, and the lowest price target on the street is $210, with the high being $325. And currently right now, Visa stock has a buy rating, 2 analysts saying buy, 2 hold, and 1 sell. And where do I think Visa stock will go long term? Well, I think that these EPS growth rates are actually fairly accurate. Visa is a pretty predictable company to analyze, and I think this is a company that will continue to have low double-digit growth rates year after year through as far as I can see. So given that, I think this company always deserves to trade in a 25 to 30 P ratio range. And if they hit this $14.24 in 2027, then at a 25 P ratio at that time, that would be a $356 stock price, which would be up significantly from $254 right now. And on the higher end of that range, if it's trading at a 30 P ratio at that time, then the stock price will be $427. So as a Visa investor in both of those scenarios, you would be getting double-digit annual returns through 2027. And I think that is pretty likely at current prices. And on dividenddata.com, you can see my watch list and my portfolio. And there you will see that I have just bought even more Visa stock. Today, I just bought 11 shares at $255.22. That's about $2.8 thousand of Visa. And Visa is now securely my second largest position in my long-term dividend growth stock portfolio. Presents about 21.6% of current value. This is a company I will continue to add to, as I think they have a wide economic moat. They have an extremely scalable business model where volume can continue to grow with very little incremental expense. And this leads to growing revenues that over the past decade have gone from $12 billion to $32 billion. Free cash flow has gone from $6 billion to $20 billion. And capital expenditures are extremely low. So all of this money can be used towards acquisitions or just rewarding shareholders through buybacks and dividends. So in turn, that's going to lead to massive dividend growth at a sustainable rate, high dividend safety with low payout ratios, and a continued decline in shares outstanding, which increases your relative ownership stake in the company, boosting earnings per share and ideally stock price over the long term. I will continue to buy more Visa stock if it continues to decline from the current price. And if you want to see more stock analysis videos, then please leave a like and subscribe to the channel. Sign up for dividenddata.com and use my stock research tool to help you find better investments. Thanks for watching. See you next time.